And
And as long as
structurally,
what's that?
there's a huge problem where the person that's deciding whether to pay out when the insurance event happens is the insurance company, which is a
Right.
huge conflict of interest, right?
Of course.
So
Of
we
course.
can fix
Yeah.
insurance itself and make it more fair, and as you said, open up the amount of liquidity available for insurance to people that have an above average, let's say, ability to audit contracts and assess the risk of the smart contract, or are willing to do the due diligence on the underlying tokens that are in the pool and the risks that they may incur, right? So
I think that I think that the ideas of stable coins, liquidity pools, tokenizations, capital pools, transparency is all going to add to the opportunity to find new. I keep saying the word. I apologize. Find new investment opportunities. Find new places to put my money that are going to be relatively diversified from each other. So it's not like I'm either in the stock market or the bond market. It's like I can participate in this insurance pool and this liquidity pool, and I can also buy a token, and I can also have a basket of tokens, and all these other investment opportunities we're going to have because of the on-chain market, I think is going to be sped up significantly in the next few years, partially because of stablecoin legislation, because as the banks are going to jump into this, they're going to just flood the market with stablecoins. They're going to have to find something to do with them. The banks are going to want to be able to find these novel solutions for trading and these novel solutions for moving money around and earning more yield. And we are going to demand that they pass that on to us, because the alternative is I can take my money out of the bank and I can hold on to it myself now, right? And I can invest in these things on my own. So they're going to have to come up with all these options. But you're right also in that a lot of those options are going to have to be insured. So we're going to have to figure out how to make the insurance work efficiently and appropriately. And so I think what we're seeing is from this administration and from this Congress and everything is going to be the speeding up of this innovation a bit, because we're not so worried about the regulation that, you know, a lot of these companies, a lot of these protocols and projects are going to feel more comfortable moving forward with this. And there's, you know, trillions of dollars at stake. And, you know, I was just at a conference this week from an organization called the Sovereign Wealth Fund Institute. So you can imagine how old money that is, the Sovereign Wealth Fund Institute. But the whole conference was about real world assets, tokenizing assets. And they were talking about tokenizing real estate and tokenizing private credit. And the funny thing is, they were still at that first order of magnitude of growth, which is, well, if we tokenize it, it's more efficient that I can trade it, or I can get more people on chain, or I can get more people to you know, own my investment. But what you and I are now talking about is next orders, which is, okay, now the banks and the financial institutions are going to be able to trade those, and they're going to be able to utilize them, and we're going to need insurance, and that insurance is going to come with investment opportunities for you and me and everyone else, and more pooling of assets in places where
more opportunities right now for Blumberg loans and all the stuff we do with like neutral strategies and all the stuff that we're doing with like carry trades of interest across pools and.
Right, but overall, again, the common person isn't going to have to know all that, because they're just going to go, oh, I'm going to invest in this company that's put together.
Yep. The common person won't have to know that, but exactly. I love that we have democratized the access to the opportunity. So anyone that's willing to put in the time to learn these things now has financial opportunities, right?
They can do that.
They previously would have been excluded to them.
And a lot of super smart people are able to get in there and build what is going to be the next generation of these financial instruments now. And yeah, there's, you know, there might be, you know, $100 million in it right now, but we know that it's going to be billions in the not too distant future, because they're building the right protocols at this point, right? And it's people that normally, you know, in the past, you know, 20 years would have had to move their way up the investment bank or move their way up the financial services firms or something. And now all they have to do is know how to code and you know, put together a group of their friends on Discord, and you don't even have to know each other's real names or anything, and you can create that. Like I think that's really,
love it,
really cool and exciting. And you know, to be honest, what we're doing, like, I'm going to be totally self-serving at this point, but that's why we realize there's a need for kind of a regulated financial advisor to help folks that are doing that are going down those roads and launching their own tokens and becoming, wealthy overnight because they launched a token or they bought a token that went up or something. And we still want to help them in a regulated way. We still want to help them and go, look, you are, your token gets unlocked programmatically over 3 years. We want to help you with your liquidity. We want to help you, with good financial strategies that anyone who has attained some level of wealth would have. And just because all your wealth is on chain doesn't mean you shouldn't have those.
I want to jump in just real quick. I was able to get us live on X right now. If you're following me at ProDJKC, we are talking with Adam Blumberg from Interaxis. It also says we're streaming on LinkedIn, but I don't know if that's true or not. It could be fake news. And we are streaming on YouTube as well. So I want to make sure that anybody that's on Twitter right now or X, just know that you are watching the very first live broadcast of the Ethfinance EVMavericks podcast, Weekly Doots podcast. And Adam Blumberg is along for the ride, certified financial planner. Now, in our DMs, Adam, you had mentioned you've got a new group that's opening up, the Enclave group. I'm going to go ahead and stream it on my window. Adam, if you shut off your video on the stage here, I'll have an easier time streaming the screen. I want to make sure that we get this out there. So if you're watching on X, we actually do this show on Discord. You're welcome to join the EVMavericks Discord. You can find a link below on X. And if you give us a like and a retweet on this, it would be very, very helpful. Looks like we got more people tuning in on X than we do on YouTube. So I think maybe we're getting some signal there. Appreciate you. If you're on YouTube, say hello, give us a thumbs up as well. So let's get into this crypto native bridging the gap financial advisory. It looks like it's for like crypto startups and founders. Am I on the right path here?
I think so. Yeah, we're going to go with that.
Hit it.
And that's what I sent you is very, very early on, rudimentary. Probably my business partners are falling over themselves right now because not everyone's excited about the language we're using. Oops.
No, that was me.
And apparently. Going with Curb Your Enthusiasm. I like that. I don't know. Well, I don't know if I like that. I don't know if you're comparing me to Larry David.
Not at all.
I don't think that's a super positive, except for the wealth part. Look, if Larry David wants to be a client with all his, FTX wealth,
yeah, I'm cool with that. There you go.
Yeah,
you got to turn a positive out of it somehow.
But yeah, the idea of what we're starting with Enclave, myself and Clayton Cruz and a few other guys. Clayton's a estate and tax attorney who's been in the crypto world for quite a while and knows this world really well. And, we just found that there are some crypto founders that have launched tokens or are launching tokens. There are some protocols that are obviously launching tokens. We've seen a few recently. Barachain, I think, was last week. And who was the other one that I got? Venice, the AI platform, launched tokens. And what we want to help with is things like market making for those tokens. Let's make sure that we help smooth out the liquidity there. Let's help the founders, because again, those founders of those protocols now have a tremendous amount of wealth that is super concentrated in one or two tokens, and we want to help them, which is good financial planning.
Yeah.
Which is, you got to protect your assets, right? You still have to protect your stuff. We still live in the US, and as much as you might like what the administration is doing, you can still get sued. You can still, have liabilities. Let's go ahead and protect things. Let's keep you as private as possible so that not everyone knows what you're doing.
Yeah.
And then let's figure out how you're going to actually get to use and enjoy and spend your money. Because if you're all of a sudden worth $50 million on chain, but you don't have access to all that money right now because of vesting schedule and because of unlock periods and everything. Well, let's make sure that once those vest and once those once we can have access to some of that money, that you do maybe get out of some of those tokens, and you are able to spend to get into stable coins. You are able to earn some yield and diversify your holdings a bit, and do little things that you want to do if you're worth $50 million. Like maybe you want to buy a car, maybe you want to go on a vacation, or hey, it's Valentine's Day, maybe I want to buy my wife something really nice. No. Right? Like I've been working really hard 24/7 for months to try to get this thing launched, and now we have a lot of wealth. Maybe she deserves a night out on the town, like those kinds of things. You want to actually spend your money, and that's what we want to help with, because the people that have attained this wealth, whether they're protocol founders or investors or the protocols themselves or the VCs or whomever, like they deserve to have, or there's probably some people on here, you deserve to have your wealth and your financial life managed by professionals that have been doing this a while, that have been in the financial services space and the legal spaces for a while, and do so in a compliant way where we have to operate as fiduciaries. And JT, like I've been teaching this to financial advisors and to RIAs, those registered investment advisors, for years, and not that many of them have gone this route. So we thought we would, and we're not the only ones. There are others that have kind of gone this route, but we thought, let's make sure we get registered. We have lawyers, we have CFPs, we have other financially registered people, but we've all been in the crypto world for a long time. And I've been doing this for over 5 years now, which is an eternity. I'm one of the old guys. I'm routinely the oldest guy in the room. But I enjoy doing all this. I enjoy talking about it, and as you can see, I get really excited about what is going to be coming in the future. And I want to get more people on chain, but it starts with taking the people who are already there and working through what they need. And that's how we're going to figure out what the systems are that need to be built. That's how we're going to find those novel investments. Is let's take the people that already have their wealth on chain and find those novel investment opportunities and figure out how to keep it safe. And if we have to, put the pieces together to make that financial management easier. And that way, when people come in later that don't have 100% of their wealth on chain, but they want some of it, we're going to have the systems for that. Right. But it's got to start with the people who already have the wealth on chain, because trying to get the average person to allocate 2% to crypto, as we've seen, means they're going to put it in the ETFs.
Yeah.
Right. Because you don't want to deal with wallets and custody and everything for 2% of your wealth. Unless you're Larry David.
Unless you're Larry David. Let's do it again. Going back to the ETFs just one more time, the staking ETFs. Did you touch on that already? Do you feel like that's going to be a real frothy moment for Wall Street to get yield going on like an interest-bearing class like that?
I don't know. I mean, you're likely going to get ETH staking ETFs. I think a big part of the reason why they haven't been approved yet is you end up with custody issues, right? You end up with like, where's the money at any one point? Where's the wealth at any one point? And that's kind of hard, right? To figure out from a legal custody perspective, because again, as much as this version of the SEC and this administration is going to try to be innovative, there's still regulations in place. Like they still have to abide by the regulations that are in place. And we have some custody rules there that says, if I'm the RIA, if I'm the financial advisor and taking financial responsibility, I got to make sure that your money's being safe from a custody perspective. And when you're staking, it's not an easy concept to understand, the fact that my ETH is now not mine. It's with this staking provider. And you and I have talked to the Rocket Pool team as well, and we know how it works.
Yeah.
But trying to get the SEC and then trying to get other people to understand how it works has been difficult. But that doesn't answer your question. Your question was, is this going to be a big moment? And to be honest, I don't know that it's going to be as big as we all think and hope it is, because in reality, the yield they're earning is not huge, right? It's 3 to 5% on ETH. And so you still have to have a super bullish stance on ETH.
Yeah.
To get into an ETH stake. It's not like you're going to get into an ETH staking ETF and your growth is going to be 10 times what it was in an ETH ETF or something. it's going to be a little bit higher than an ETH ETF. So in the mindset of most people, you're still taking a tremendous risk.
Yeah.
If you haven't been on board with ETH this whole time, that it's not like the staking is all of a sudden going to open it up for all these institutions and they're going to go, oh, now we feel perfectly comfortable with it.
Right.
Because
but
they weren't comfortable with ETH.
It's also nonsensical. It's also nonsensical to have a position of, we're going to protect you from making the yield on your own money. Like, you can't make yield on USDC because then there would be an expectation of profit, and that makes a security, and it's an unregistered thing. So now it's under the SEC purview. And so the response of all the, the design response is, well, then you don't get the interest. There isn't an expectation of profit, so you don't pass that part of the Howey test. So now it's not under SEC purview. So the SEC, and it's, you can't make yield on USDC to protect investors, is denying investors on the proceeds of their own money, right? Which is like a Ministry of Truth level of perversion of, the intent, right? So we have to figure out a way to work through, since this is essentially a native internet bond, the risk-free equivalent rate of return on this ecosystem. We have to figure out a way to protect investors by empowering them to make that yield safely, right? And I think that Hester Peirce is pro innovation and is willing to make great strides in this over the next couple of years, right? Just on that basic premise of the SEC did not protect me from my money when they stopped UIDX from giving me an airdrop. The SEC did not protect me from my money by denying me the treasury bill income on USDC for years. The SEC did not protect me from my money by suing some company that I had the tokens of and driving that token price down, right? They're not protecting investors in those actions. They are actively hurting investors, and it's a perversion of their mission statement.
Yeah, I'll agree with that. I will agree that, and we all will agree with this, right? The SEC has been hurtful to the progression of crypto. Now, crypto, blockchain, Bitcoin, everything has still marched forward, even with a negative SEC. So the march forward has still been there. You wonder, like, where would we be if they would have been open and listened to everything? But look, I guess I'm relatively Buddhist in this stance where I'm just like, look, everything's going to happen in due time. Everything's going to happen when it's supposed to happen. And we can, bitch and moan and complain about it, but we are where we are. And I want to, address what you just said, which is Hester Peirce and the crypto task force of the SEC seems very open to come in and talk to us and let's work this out instead of you doing what you're going to do. And we're going to look at the regulations and we're going to decide to sue you. And that's how we're going to do this. They've been they seem to be very open to come talk to us and we'll figure it out. I've written a few emails already to that group going, look, here's what I want to do with our RIA. Let's talk about if this is legal, if it's compliant, if we need to sandbox, whatever we want to do. But I certainly don't want to one day get a Wells notice from the SEC. And I feel comfortable that won't happen. I also want to address, there's a question in the chat, a pretty long one. And so I would like to address it because it's something I've been thinking about. And it goes along the lines of the SEC and everything. Do you feel the industry can really move forward with serious adoption without formally elected global government level control? Basically, ultimately, the majority of chains and protocols are controlled by private entities that are undoubtedly hard-shouldered. Early adopters, big bag technocrats, VCs. Bringing TradFi on chain feels like the death of crypto. So here's what I've said, and I said this early on in this talk. We have to be really careful about how excited we get about the government allowing things, about stablecoin legislation and everything, because we get super excited because the last 4 years have been so awful in terms of what's been allowed, right? And now we get super excited because we're like, oh yay, stablecoin legislation. The Congress is behind it, and they might approve it. And the SEC is letting everyone come into and ask questions and such. And I'm a little bit worried that we're going to end up in roughly the same place we've been, with a little bit more efficiency. Like you said in the chat, everything is now on chain. But that on-chain is controlled by a very few people that have a whole lot of money. which seems an awful lot like the banking system that we have right now, right? Which is exactly what we're trying to get out of. And we just have to be, I think, very careful with how much we give up to get this idea of regulatory clarity. How much are we willing to give up because we're so excited to have an administration and a government that seems to be pro-innovation and pro-crypto? But remember, it's still a government, it's still regulators, it's still people that haven't been in the trenches with us. It's still people that are, what they really want is votes, right? So that they can get reelected. And I don't mean that to be, all tinfoil hat or anything.
It's fair.
I mean it to be very, very realistic, right? Talking about crypto got them elected. If there's huge upheaval, if there's a bunch of rug pulls and a bunch of people lose money, coming down hard from a regulatory perspective is going to get them elected the next time. And that's really what they care about.
That's something I've been wrestling with about, it was on one side of that coin, just like you said. Trump walked in the door, day 1, day 3, day 5, day 14. Now it's kind of like, wow, this thing is really exploding. And then all of a sudden, Trump coin happens, and people got really burnt on all that. And it's like, God, you really there really is a door that opened up to the positive for this space, and that door can close again in 3 or 4 years, or even 2 years, really.
Right. Or JT, who I apologize, whoever in the chat wrote it. It's not necessarily that the regulatory door closes. It's that we're just beholden to different relatively centralized entities. And we all know this, that most DAOs are pretty much controlled by a few people. Yeah. Right. So how much different is that? Then we're just controlled. It's just all controlled by different people. So we also have to realize that this is, kind of my opinion, that this is the technology isn't necessarily revolutionary, it's evolutionary. And it's just a natural evolution of technology and a natural evolution of financial systems to make it more efficient to move money around, because that's where the financial system is, right? It moves money from where it's less efficient to where it's more efficient. And the huge traditional financial global system that's been built has been built so that if I have money in my pocket earning nothing, I can get it to someone else who can do something better with it, and that's better for the global economy. I get an incentive to do that. They get an incentive to do that. That's the whole purpose of this business. And this technology can definitely help with that from an evolutionary perspective. But what it can hurt with is if we just move to, again, different groups that aren't called banks, but they're essentially banks at that point, that are controlling all the protocols and all the DAOs and everything else, and we're going to end up with the same system. The difference is they might be in other parts of the world, or they might be in some way, created in some way that from a regulatory perspective and from a legal perspective, we don't have any control over it. Right. So it might end up being a bad thing. So I think there's worry, JT, of are we letting the government have too much control because we're so excited that they're happy with us? Mm-hmm. And then are we going to open it up so much and have so many of these other protocols come in that all of our money is with, again, a few wealthy people who did it early on, and we're in essentially the exact same situation?
I mean, this is the danger of token-based voting in general, right? Because identities, addresses are free, we're using money as proof of personhood, right? In order to say, the people that have more money get more votes because they have the provably scarce thing. Until we crack a digital ID system, with unforgeable identities, we're kind of stuck with something like that. And even if you say, okay, we did crack a digital identity system, is democracy really working out that well? I mean, frankly, right? Democracy depends on the informed voter population, right? And if we have misinformed voter populations because of systemic misinformation and AI deepfakes and information bubbles, then it kind of falls apart. So when you want to talk about who should be running the things, there's inherently going to, insofar as it's going to be running well, it's going to be run by people who have some merit, some expertise, understand how things work, and that is an inherently centralizing force, right? Right. So do you want a technocracy? Do you want a plutocracy? Do you want these are basically going to come down to how we evolve the government software that governs DAOs, that governs the chain, right?
Right.
And right now, the L1 governance process is very political. Everyone knows each other. There's no anonymity, and so that's their proof of personhood thing, right? And you get clout based on, basically reputation, right? So like Justin Drake has a lot of clout based on all long-term reputation. That's relatively resilient to government takeover. But staking itself is not, right? The validator seg, you could go and how much of the ETH could you buy before you get the ETH price up to $10,000 or $20,000? Is it enough to threaten the network? I don't know. Maybe there's like 18 million ETH available on centralized exchanges, right? And there's going to be a lot more that comes online to those centralized exchanges by the time we get to 10,000, right? So you probably could go and acquire like 30% of the supply for what amounts to enough money. It's a good deal for these, entrenched financial players to do so.
Yeah, and you're right. Like in the long run, humans are going to human, right? Like we can't technology away humans, and we're
trying real hard.
we're trying. It's just humans are going to human. People are going to want to make money, and we've seen. I feel like we've seen very much an over financialization of crypto. It's been for the last few years. How much money can I make in a really short amount of time? Of crypto. It's always
there's toxicity in crypto Twitter and some really short-term greed and people doing token grifts all over the place. But I like to think that underpinning all of that is a blockchain system that has fundamental technological advantages of finality and credible neutrality and atomicity and other things that allow us to have more efficient financial systems, more open and democratic financial systems where we equalize the access to opportunities, if not equality of outcome.
Right. And someone asked earlier, I think in the chat that I responded to earlier, which I didn't get to, is bringing kind of TradFi on chain going to be bad? And my answer is like, no, because finance is finance. Again, you're trying to get money from where it's less efficient to where it's more efficient. If I want to invest in real estate, well, ideally, I would like everything to be on chain. I can't put real estate on chain, but I can put the denotion of my ownership of real estate on chain. I can put the distributions for the real estate tokens that I own.
And the mortgage can be on chain, right?
Right. It can all be on chain, which opens up other opportunities. So in 10 years, it's not going to be DeFi and TradFi. It's just going to be finance. This is just a better, more efficient system. It's better to have everything on a similar database to where it natively talks to each other. We're just going to have to go through the crap between now and then of some people want to make a ton of money because they've seen their friends make a ton of money and they want to launch meme coins, or they want to launch a protocol that does nothing, but they launch a multi-billion-dollar token for it. You're going to have rug pulls and you're going to have bad actors and everything along the way. And we just have to look at the fact that eventually this is just a better, more efficient system. And if you all remember, like, again, I'm always the oldest guy in the room. I'll be 50 in a few weeks. But I remember early days of the internet. The early days of the internet sucked too. Right? It was hard. Like companies didn't like it. People were losing money. People were worried about, getting credit card numbers stolen and everything. And there you go. We're doing dial-up. I appreciate that. Oh God, I remember that. That's college, man.
That's right. How is she gonna download Smells Like Teen Spirit?
Exactly. And only get halfway through until mom calls and screws up the whole thing.
Damn it, mom.
I know. Stop calling me when I'm trying to download illegal music.
How am I going to get And Justice for All on my iPod?
Exactly. So that's iPod, man. I was way before iPods.
Way before that, even, yeah. Sony had like a 1 gigabyte or a freaking 512 megabyte. Like,
Winamp. And I was downloading it. I had it on Winamp on my computer. So I could only listen to my illegal music on my computer.
The llama,
that was the only place.
What was their slogan? The llama. Somebody's gonna find what was that.
Yeah, I remember that. Anyway, but like the early days of the internet, I mean, look, the internet was driven forward by gambling and porn. Mm-hmm. That's what moved it forward. And for most people in the like sophisticated world, that kind of sucked. But it got us to where we are now, and we're just gonna have to deal with that crap for a little while. And we're going to have to deal with the fact that that, those of us in this room are going to have to go, look, it's not all going to be 100% decentralized. And we're not going to copy and paste the traditional world onto the DeFi world tomorrow, but they're going to have to come together. Why? Because there's hundreds of trillions of dollars worth of real estate in the world and worth of oil and gas in the world and real companies and everything. And if we think this database or these databases we have are better technology, all of that is going to have to come on chain. Otherwise, it's going to be this super niche system that only a few of us know. And that super niche system isn't worth trillions of dollars when it's just those of us in the room trading it with each other.
I'll also bring up AI systems into that mix, right? So as we start to get more modular AI systems that, how do they pay each other? How do they interact? Do you think they're going to use a banking layer? No, not really, right? So if you believe in a multi-trillion-dollar AI future, and if you look at the investments of all the Web2 giants with the hundreds of billions of dollars of outlays, and including power plants and custom fiber lines, and God, how much they're buying from NVIDIA, right? They clearly believe in a multi-trillion-dollar AI future. Well, then you really do believe that those agents are going to be interacting over native rails, native digital rails that that don't necessarily link back to personhood, right? And so, crypto is going to be instrumental for that sort of computerized information revolution.
Oh yeah, it's gonna work with AI. Like, all this technology is kind of coming together, and it's just a natural evolution. And there's no way that government or anyone else is going to stop it. And I know that because they never have, because we're all talking to each other via, like, I'm on a camera, you guys are in different places. What we're doing right now was science fiction 30 years ago. We always 100% of the time progress forward from a technological perspective.
It's out of technology. Can't be stopped.
Yeah, exactly. And if we look back after 30 years, we're going to go, well, that was so obvious.
Yeah,
of course. But right now, it sucks. Yeah. Like, it's hard. We bitch all the time about how hard it is to go on chain, and even those that are really, really versed in it and do it well every day still get hacked and rug pulled and everything else. And it's not an easy thing. It's like a full-time gig. I mean, if I've lost money because I try to make one transaction while I'm doing something else, and I copy and paste wrong or something. Or I don't realize that what I'm, the website I hit is a scam website or something. I've done that before.
Or you're not paying attention. You're not paying attention to gas prices, and you overspent on gas prices because the thing was spiking because of a CryptoKitties launch.
But this just goes back to where I was saying I think that we're mostly going to see institutions offering. Using the chain and offering increased, improved products to consumers, and consumers won't even be knowingly using the chain.
Oh yeah,
but the moment those rails exist, the moment those rails exist, though, then users can use the chain, and that ability to opt into it, I think, makes a world of difference in keeping everyone honest, and that is a hugely
we have to realize
positive
that like having those institutions come on chain is part of the compromise we have to make to. I think this is a better technology, right? And that just means that, sorry, JP Morgan's going to issue a token, and you and I and several other people are going to transact in the JP Morgan stablecoin that's available to everyone. Why? Because it's easier, because it's a better system. And yeah, I'm not a huge fan of JP Morgan, but that's just part of the compromise and part of the gig. Why? Because that's where all the money is. They have all the money, and they're gonna realize it. Like, the things that they say versus the things that they actually do, they're not that stupid as we make them.
As it turns out, they made that money somehow. Yeah.
Exactly. Well, rich people for the most part are not stupid, and they kind of know what they're doing with their money. And what we're going to find, I think, this year, if some sort of stablecoin regulation gets put in place, is how many of those large institutions, banks and others, have been working on this for a few years, because the day that legislation hits, they're going to push a button and bam, there's going to be billions of stablecoins issued.
Totally agree.
Oh yeah, you just go to the patents. You can see the patents that are registered to these major companies, and like Bank of America has like a dozen blockchain patents, despite having no blockchain product. Like, they're ready. It's coming. Yeah. And there's going to be a race because, as I said, there's yield here, and they can offer their customer pennies and make $1 on it, right? So they're coming.
They're coming.
Going back,
but I'm glad to be in. I'm glad to know what's happening early. I say this all the time. I talk to people that are, launching new protocols or custody or something like that, and then I get off the call and I'm like, I can't believe I understood what was just happening.
Yeah,
I have no idea how I understood what they just said. But if someone listened in on my conversation from outside, they would think I'm speaking another language, which kind of am. And I don't know it nearly as well as you. Like, you guys know it 10 times better than I do.
Well, I call it Fey touched. It's like you went to the Feywild and came back a little bit crazy, right?
Yeah.
If you hang out in crypto long enough, you come out a little bit Fey touched, because no one's talking about, like, what's the moneyness of something. Like, that's not an everyday conversation that people talk about, right?
Yeah, exactly.
So
and that
come
being
back weird.
said, look, if anyone's going to be at ETH Denver, I'm around. I would love to hear what you're doing and love to have more of these conversations.
Absolutely.
So I would love to do that. Someone you brought up actually insurance earlier. I'm actually moderating 2 panels at RWA Day here at ETH Denver. I live in Denver, so here in ETH Denver, that are both insurance related, because I started my financial services career in the insurance world, and so that actually really gets me excited, because there's trillions of dollars in insurance that none of us get to have access to, that growth, and I mean, none of us have access to those assets. And I think it's tremendously interesting, and what blockchain technology can do for insurance is going to be mind-blowing.
Going back, earlier we were talking about, JP Morgan has the money, BlackRock has the money. Well, all that being true, and I think you would agree, just rewinding the tape all the way to the beginning of the conversation, basically about the ETFs and stuff like that. We know that that's an instrument for helping to stabilize or raise prices in many respects. It helps bring TradFi money into crypto to some degree, but the money's still going to a centralized entity. We got to keep our eyes on the prize of decentralization. If you want to trickle down the money from them, you got to make them come over to the decentralized side of things too. So obviously, hoping that the regulations and stuff under the new regime, at least in the United States, allow for more DeFi innovation to abstract some of that wealth back to the everyday people that just want to park their stable coins outside of a bank's walls in order to stay on chain and do things like that. And the other point I want to make, we were talking about the tide of technology and the rise of the internet and everything like that, and how early we really are. I have a real world story. My wife, I wish I was making this up for a laugh. She was born to parents that went through the Great Depression, youngest of 15. Her dad was 52 years old and her mom was 47 when she was born. So I'm married to a woman that is like literally the child of somebody from World War II. Does that make sense? She just for the first time, she's like, how do you send me money? I said, well, you need to have online banking. She hadn't even signed up for online banking. She still calls the bank to do her checks, and she still writes checks. Okay. So like, you talk about being early. When she finally got the online banking thing figured out, she just sat in front of the computer and like, oh my gosh. Like, it's just like the most basic story in the world, but it resonates with a lot of people too. It's still, I talk to kids that are under 20 and they just know that their friend's dad, aka me, is like interested in crypto, but beyond that, they don't know anything other than like the word Bitcoin. These are young kids. They don't teach anything in high schools about it, because probably it's not worth talking about. If you're going to teach anything about crypto in high school, it's probably going to be that it's mostly a lot of crime, and it's a lot of crap. And it's
you got to have someone who knows it well enough to teach it.
Exactly.
Right.
The use cases that make the
headlines. If they knew that, they'd be making more money than they would as a teacher. So,
right. Yeah, exactly. Yeah.
I'll go. Hey, if you're a high school in the area and you want, I am more than happy to come in and chat with you.
I've talked to KU a couple times. It's fun talking to college kids.
I've been guest lectures at a university on this topic more than once.
Yeah, but look, along those lines, JT, like I have a 21-year-old nephew. And he texts me all the time to show me what he's doing. And it started out with buying meme coins. It started out like 2 years ago. He's like, oh, look, I bought Dogecoin. It went up. And lately sends me messages, and we have conversations on the phone. Actually, it's not all text messages. I mean, we're not that old. We're not. Yeah,
right.
We're old enough that we still have a phone call. But he sends me stuff he's doing on like liquidity pools that he's participating in on Aerodrome, on Base and stuff. And I'm just like, that's awesome that he's learning all that. I said, you are going to have a job available to you for the next 30 years. Easy. Because you're learning all that now.
We had a family friend that has a 17 or 18-year-old that called me up and wanted to pick my brain about it. And I go, so have you already invested something? He's like, yeah, I just turned 18. I already started buying stuff. I said, let me guess. XRP. He said, yeah, how did you know?
Yeah.
I said, because you've been told that it's going to be the international banking rail of the future. And he's like, how did you know that? And I'm like, well, that's their marketing. Said, let me guess. Also, you got probably some Solana. How did you know? I'm like, it's just marketing. I get it.
Yeah,
right.
you got to get through waves of misinformation to get to until you actually discover there's more money to be made in the promotion of these things, and so those monies are loudest, right? Those messages are louder. They're amplified by that incentive. Whereas when you get to the core, the higher fundamental value stuff, that's not the message that's broadcast the loudest. So you have to kind of like get through a lot of education and sometimes learn by losing before you go searching for deeper truths and really come across the meat and the fundamental value of the technology in this space and the things that brought a lot of the people here back in like 2015, right?
To his credit, he did buy Ethereum also. I just was able to list the top two. And I was very, very proud when he mentioned Ethereum, because he did know that it is kind of like this computer type thing. But what's most important is he's thinking about his future. And, we don't always make the best plays at 17, 18. You know what I did? I traded money for beer and cigarettes when I was that age. He's at least thinking about something besides that. So
Nixa got in from Silk Road and trading drugs, right? So
that's a great story. And I don't know if that's public, but she has an awesome, awesome story about Bitcoin and early days meeting somebody on a deal, so to speak. Well, we got Adam Blumberg from Interaxis joining us on the EVMavericks podcast today. If you're watching on X, you can also find the link to the EVMavericks Discord if you want to join us live on the Discord. That'd be great to see you there as well. We're also streaming on YouTube and LinkedIn. We're going to try to broaden out our horizons a bit. We are broadcasting live from the R Ethereum community on Reddit. And Adam, I want to be respectful of your time. We still got a little bit of our show left. And maybe you can stick around and we could read some Doots together. I'll read them out. We could do some color commentary. Other than that, is there anything else you'd like to tell the world before we move on to the next half?
Oh, man, I'm like I said, I'll be at ETH Denver. If anyone's also here, has questions, just want to chat, happy to do all that. We're launching our firm. If anyone's got their own, protocol that's launching, tokens that are launching, have a significant amount of wealth in crypto and wants to keep it on chain, come talk to me. And like I said, if you got a high school and you want to teach it, I love talking about this stuff. I could do it all day long. So anyway, I'm honored to be here, and let's go live color commentary if you want. Absolutely.
If you want to find Adam on X, he is at Interaxis 8. At Interaxis 8, and he's also got the Bespoke Group Twitter handle, X handle as well. All right, well, very good. We're going to move right on over to the Doots of the week. If you're watching this on X and you're like, what the actual hell is this? If you go to our Ethereum, we have a daily general discussion, and it's hosted by Ethfinance and the EVMavericks, and it's a roundup of all the top comments of the day. And then each person gets a point every time they make the list. Well, fast forward now, we have 1,153 Dooters as of the time of this podcast. Let me refresh the page because it may need to be refreshed. All right, looks good. Anyway, so this is our rich list. We have over 1,000 people that have made it on the rich list. And the top 10 include Set One Less at 105, Henny Abu at 108, 111 for 696, 112 for Crypto Currency, 115 for Ethical Trade, Tricky Troll at 142, Harog at 158, Bonito 2030 climbing up 163. Logri the Bard at 171. Superfizz is at the top of the heap at 219. Moving on to our upcoming guests. Next week is our 100th episode. Still looking for a guest for the 100th. Ram Aliwalia, coming from Lumina Wealth. Adam, I don't know if you've ever talked to him before. He's a lot of fun. Ram's a very knowledgeable macro guy, economics, all kinds of stuff, stock trades, crypto trades.
I know Ram. I know Ram pretty well. I always recommend people follow him. His analysis, especially on X, it's really good. So yeah, I know Ram pretty well.
He has actually been on before. I was really, really glad that he wanted to come back on again. Andy Lower from Scenario Protocol. Brett from Make It coming up. This is going to be kind of a fun episode, I have a feeling. I've listened to him talk a few times. He's got a little bit of a conflicting love I see in the daily, and I think he's going to be a pretty dynamic guest. I can't wait for that episode. Grant Hummer, coming from Etherealize, also going to be a banger of a guest. I also just booked on April 4th, Summer.fi. We got Jordan and I believe Chris, maybe, coming from Summer.fi. If you haven't been there before, I have not. I believe it's Summer.fi. Yeah. Automated exposure to DeFi's highest quality yield. That'll be a good episode. That just got booked today. The EVMavericks podcast barbecue Wednesday, the 26th at ETH Denver. I believe this is sold out. But I did pick up a second one at a Green Pill location the next day. So, and Adam, regardless, if you're in East Denver, just ping me because I can, I'm going to make to-go plates for anybody that can't actually come to events, or if they have some room, I want to have you there. We'll figure something out.
Well, JT, like, you're from Kansas, I'm from Texas, so in theory we should have a barbecue cook-off, right?
I'm in, dude. I'm in. I just made brisket for the Super Bowl.
Real quick, it's on Thursday, the 27th.
Thursday, the 27th. Yeah, thank you. Is that A-word? Thank you, A-word. Yeah, so it's at a Green Pill location the very next day. I'm gonna be a tired baby, man. I'm literally driving in. This barbecue is Thursday. This is that's the Pistachio Fi. Yeah, this is Pistachio Fi. Should say Thursday, the 27th, and then I'm doing Friday at the Green Pill location. Okay, we'll get this fixed up. But anyway, I'm going to do probably 12 pork butts, maybe 14 over the course of those 2 days, and try to cram about 200 people through the food line. I'm driving in 2 smoker barrels in the back of a town and country. It's a long trip through western Kansas, but it smells good the whole way. All right, here we go. This morning's roundup let's see what we got. This morning's roundup, $10.9 chimes in. Ethereum Frank the Tank at 27.01 on the price. I think we're going up, fellas. I don't know. And ladies, Self-Made Millionaire chimes in with a ratio at 0.0279 and uses Bink Video at 3.6 million subscribers on our Ethereum, up 2,286 from last week. Our weekly haiku, courtesy of JS Tears, Valentine's Day wish, Ethereum ever swish. Don't be or do not be selfish. How does he do it? JS Tears, how do you do it? All right, and we got our Dr. ETH stats every week. It looks like the BTC ETFs had 157 million net outflows. It doesn't say anything about the ETH stats on that. Let's see. Looks like our 5-day average is over 30 days, $3,043. So we're still under that number as well. Total ETF flow, 3,144. I think that's millions. Could be wrong. Good. All of that comes courtesy of Ultrasound Money, Farside, and CoinGlass. Our shit post of the week comes from one of my favorite contributors, Ethical Trade. And just like that, the entire crypto community decided to pretend they never made a shit joke. Oh, this must be in relation to Vitalik's Make Communism Great Again tweet. Maybe I'm wrong. That's on brand though. It's like you just never.
You are correct.
You just never know, man. Like his brand of humor is sometimes misses the mark. It's sad to say, but I don't know. If we gave some of these other people as much grace, it wouldn't be as big of a deal, you know. All right. Fecal receptacle has a security warning for people not properly securing recovery phrases. This is according to Schneier.com. The malware in question uses optical character recognition, also known as OCR, to review a device's photo library, seeking screenshots of recovery phrases. Damn, for crypto wallets. Based on their assessment, infected Google Play apps have been downloaded more than 242,000 times. Kaspersky says, quote, "This is the first known case of an app infected with OCR spyware being found in Apple's official app marketplace." That's freaking crazy. Award, thanks for putting this on the Weekly Doots. Wow. Apple having OCR spyware allowed on their official app marketplace. That is pretty unprecedented. So it scans everybody's phones in their libraries for screenshots of recovery phrases. That's kind of like a new version of a keylogger, for traditional texting or whatever. Actually examining photos. Yeah, it's only going to get worse too, User Physalis X has been a heck of a teacher. Covers a new secure messaging protocol entering testnet. Okay, here we go. XMTP, the decentralized messaging network, launched their testnet yesterday. Let's open this up. All right, there it is. The testnet is live. Building the world's most secure decentralized messaging network. Has officially announced the launch of its testnet with early providers that include industry leaders like Coinbase Wallet, Circle, ENS, A16Z Crypto, Alchemy, Faction, Mask, and Ephemera. This marks a significant milestone in the evolution of a decentralized, secure, and open communication. Okay, good. According to Joe Lubin, co-founder of Ethereum and the founder of Consensus, quote, "Projects like XMTP deliver next-generation sovereignty, privacy, and censorship resistance, essentials for a healthy and functioning society. Decentralized value transfer is critical to a free society. Perhaps even more fundamental, decentralized messaging is the foundation for a free and empowered society. In an era where privacy, confidentiality, and resistance to censorship are under threat, XMTP stands as a safeguard for our privacy and a protector of our fundamental right to communicate." And that is Joe Lubin. Which, by the way, I did get an email back from his staff that he will not be a guest on our 100th episode of this podcast. That's okay. Well, it's okay. We'll forgive you. But seriously, it'd be fun to have you soon. We did try. All right. Thank you. Rhythm of ETH, user Rhythm of ETH checks in after the 20% gas limit increase. Let's look at their Doot score. Dooter number 14. By the way, Physalis X, I always like to read out the Doot scores. This is a Dooter number 22. All right, Rhythm of ETH, Dooter 14 checks in after the 20% gas limit increase. Some analysis of the aftermath of the gas limit 20% increase. Bullet number 1, the number of transactions per day keeps hovering over 1.25 million per day. No surprise. Max transactions per second seen in the chain was roughly 16 TPS. Daily gas use jumped from 108 billion to 130 billion. Block size jumped only 10%. Last 4 days, the average gas price has been 3 gwei, with long streaks of under 1. All of these stats come from Etherscan. It's safe to say that the demand for a gas increase was there, and that there's likely room for another safe 20% increase, provided Pectra is deployed at some point in March. All the new gas available is being used, and L1 has not seen a decline in activity, but a considerable decline in gas price. Ethereum is primed for scaling, and all that comes. Blobs and sharing will enhance this further. The main concern now would be to create a seamless experience for users, great and innovative dApps, huge adoption through interoperable L2s. The path is clear. All that's left is execution. User Harog explains why the L1 hasn't been scaled more so far, and how we will be changing this. User Harog is up on the big list at 158. Adam Blumberg, you would love this guy's writing. Yesterday, user numerous ruin 4947 had a question about L1 scaling and was wondering why we did not increase the block size by a factor of 4 to 8 yet. And there's a link to it. And here's my thoughts. It always was, and still is the goal to scale the L1. But scaling the L1 is more difficult than scaling through rollup, so it takes more time. If you would have increased the L1 throughput by 4 to 8 times many years ago, we would have had the following issues: state and history size. We would be in the range of 4 to 12 terabytes of disk usage. Not that easy to find good NVMe SSDs in that size range. Until 8 terabytes, there are options, but only recently there are consumer options. If you need to go above 8 terabytes, there are only server-grade ones, and they cost an arm and a leg. Next up, SSD speed. Already nowadays, you need good SSDs to have a good attestation efficiency. With state being 4 to 8 times bigger, you probably need some of the best ones out there, or even store most of the state in RAM, like Solana is doing. Not cheap to build a machine like that. Next step, CPU usage. With a small state and the current number of transactions per block, we can easily validate a block within the few seconds we have. If you increase the block size, the validation time jumps linearly at first, and when the state size grows over time, the validation time grows superlinear in the long term. Just a few years ago, we could not handle that. Nowadays, a mainnet block takes a few hundred milliseconds to validate on consumer hardware, so we could easily increase it maybe by a factor of 2 to 4 at the moment just by looking at CPU usage. Bandwidth. That is the most difficult one to judge. We already know that 10 megabits per second upload speeds have issues publishing self-built blocks. Currently, even in the developed world, huge parts have upload speeds of 20 to 30 megabits per second. So there is a limit on how much you can grow a block before you hit that limit. All these factors together limit the scope of how much you can scale L1 while still keeping the chain decentralized in the sense that home stakers can participate. Sure, we could go the server chain route, and Polygon Proof of Stake and Binance Smart Chain have shown that you can easily increase throughput by an order of magnitude if you do that. But Ethereum wants to be the global and neutral settlement layer, so it takes decentralization and resilience road instead of short-term maximum throughput road. If a chain cannot be validated by a large group of unsophisticated actors, ding, 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 sounds like me, anymore, it becomes a chain that you have to trust intermediaries to not take your wealth from you. So realistically, we could probably safely increase the block size after Pectra by a factor of 2. If you're adventurous, a large factor is possible, but we probably better wait for upgrades which tackle the problems above. See my comment to the post for more continuation, and it goes on from there. I'm going to read this piece here, snarkification of the base chain. That is many years out, but it would allow to validate blocks without redoing all transactions in a block. You could then validate the chain on a smart watch with 100 times large blocks than we have now. That's a big thing. That would be awesome. Excellent. I love these usernames. Captain Crunch Hiker. I don't know. It just seems like a dude with a red beard. Captain Crunch Hiker is a duder number 3. Wow, relative newcomer on the podcast on the Weekly Doots. Currently, there are 3 defined stages for L2s. I'm going to go back. Captain Crunch Hiker has an idea for L2 beats roll-up stages, and user, here he is again, Harog, explains the logic behind the status quo. Captain Crunch Hiker writes, currently there are 3 defined stages for L2s. Stages 0 through 2, correct me if I'm wrong. In my opinion, there should be an additional stage specifically focused on interoperability requirements. I'd even take it a step further and propose that at some point in the future, L2s should only be allowed to utilize L1 resources cheaply once they meet these interoperability standards. If we end up with hundreds of L2s next year, It would be highly problematic if they all operate in isolation, leading to fragmentation, inefficiencies, and a poor user experience. User Harog replies, small correction, stages are defined for rollups, not for L2s. I personally would be careful to make decisions and draw lines about the economics of rollups. The market is very young. It is not yet clear how much a blob really will be worth. Base is economically extremely successful, but some other rollups are not. Dangerous to make rules when only one rollup has massively taken off yet. As far as I see it, the L2 beat stages have been done to push rollups to follow best standards in the part which is invisible to the user. This makes the dirty little secrets very transparent and accountable. Interoperability is pretty simple for the user to check. If a protocol they want to use is not available on the rollup they are on, they will pretty immediately see that and manually bridge to another one which is interoperable with the rollups they want and never look back. Nevertheless, it could very well make sense to aggregate the economic interoperable zones to make them visible for the user. But I personally do not think that extending the stage's definitions is the right place to do that. User Henny Abu has made a dashboard of Ethereum dashboards. Of course he has. Of course he has. Henny Abu is also going to be rolling out a new Doots website for us.
Meta.
So meta. This guy, if you're not following Henny on Twitter, you really should. So here's your Ethereum dashboards. He's got a collection of useful dashboards for the Ethereum ecosystem. Are you serious? Ethereum, oh bitch, he's got it all. DeFi Llama, rollup codes, rollup what? Oh,
it looks like a bookmark folder I have actually. Yeah.
Oh my gosh. Gas limit, Ether's money, the Ethereum ecosystem as a whole, DApp radar, and it's searchable. A blob simulator, Jiffy scan, stablecoins. What the F? Validator Q. Let's go look at Validator Q. I haven't looked at this in forever. Wow, look at that.
Looks healthy to me.
It's just like flat. Wow, look, active validator's going down.
Yeah, slightly.
That's cool.
I mean, that makes sense, right? Like
it's healing.
There's a lot more yield in DeFi than there is in staking at the moment.
Yeah, the world is healing, isn't it? Oh my gosh. Henny Abu, that guy, freaking legend. Thanks for helping out with the podcast. He's been a real central figure of this whole thing, honestly, curating all of these links of these best of the week. This is all subjective, by the way. Wolf Parking, this guy's been on a tear. He's a Duder 45. He had a triple kill last week and made it on the weekly podcast. Wolf Parking has an update on Alexei Pertsev, one of Tornado Cash's developers. He's out of prison. Pertsev was released under the condition that he remains under electronic monitoring, with his appeal potentially setting a precedent for how courts handle privacy-focused crypto developers. Quote, freedom is priceless, but my freedom cost a lot of money. My house arrest was only possible thanks to the work of lawyers who were paid from your donations. My fight is not over yet, and for a final and confident victory, I still need your help. Please support our fight here, and there is a link to a juice box. And there you have it. He's raised 186.23 ETH. Looks like over the last 7 days, he's grabbed a little bit, not too much. It looks like the last 30 days he did really well. It's good on him. What a story that is. That's going to be a documentary someday. If you're watching this on X, this is our first time doing this podcast. We have this little community on this platform called Reddit called Our Ethereum. You should go back. You should go back from X, back to the home where you started your Ethereum journey, and live in both places, honestly. It'll do your heart some good. It's okay to come inside our bubble and get off of crypto Twitter every now and then. Astra shares their most.
It will definitely lower your blood pressure.
It will lower your blood. If you just need just come. It's like it's nice. You come back home, you see some familiar faces. Maybe you'll find some new ones. You can install a little GitHub link. You can see who's got these doots and who doesn't on old Reddit. It's cool. We got a really unique thing over there. Always have been. We never left. We've just grown up a bit. So we'd love to have you back. Interaxis is a duder number 65 this week, climbing up. I posted, he says, shares their most painful in real life crypto interaction yet. Oh man, I got to sit down for this because I don't like painful ones. I'm going to lower this. I got to lower this desk down. I got to sit down. I hate this shit. I hate it when I hear about painful lessons because doggone it, it rings true. It's just.
I mean, he's not saying he lost money.
Okay, good. Carry on. Okay, thank you. I'm glad nobody's lost money yet. I've posted stories like the one below before again and again because it is not the first, the second, or third time I've found myself in similar situations, but I promise the story is accurate. If you guys avoid to talk crypto in real life, you have no idea how deep the shitcoin propaganda has penetrated in crypto illiterate boomer cycles. Wow. Here we go. Yesterday, I found myself with a bunch of boomers. Okay. I got to pause right there. I think that word gets thrown around a lot. Nobody really remembers what it actually means. Like, are you talking to people in their 70s? Or are you just talking about people over 30? You know?
Yeah, you guys are Gen X. I get that.
Because boomers has a real, I get it. So here we go. I'll shut up. Yesterday, I found myself with a bunch of boomers. The discussion turned to crypto, and one of them that knew that I was heavily into them asked me what I thought. Turns out half of them hadn't even heard about Ethereum. The other half completely disregarded it. Instead, they started asking me how high I thought, Jesus, XRP and XLM will go.
Stellar. Wow.
Here it comes, since they are going to be used as banking intermediaries. This is Sparta! In Japan. In Japan and soon the US. They showed me TikTok, Facebook screenshots with XRP and XLM graphs pointing to the moon. They told me how they can easily go to $1,000. The screenshots were comparing the price of XRP to a kilo of gold and the price of XLM to a kilo of silver. Oh my gosh, no mention of market caps. Zero crypto lingo. Oh my gosh, really? Just straight propaganda directed to NPCs. The most technical word mentioned was, here we go, blockchain. But without anyone having the slightest idea what it actually does. Of course, smart contracts could as well be quantum physics. These are people of retirement age that can easily throw a cool $2 or $3 million to XRP and not even think twice. And while I have to
Adam, there's your prospects. Go get them.
Go get them. And while I have to work in dollar cost average $200,
I have a story about that when you're done.
You got it. I have to work. He goes, and they won't even think twice. While I have to work in dollar cost average $200 every other week. And this is having an impact to my monthly disposable income. A couple of them had even thrown a few thousand to Trump coin just because.
We have pizzas, we have 300 hamburgers, many French fries.
At least they didn't know about pump.fun. I guess that was too technical. Oh my gosh, I feel like nothing has changed in the 7 years that I'm into crypto. I know life is unfair, but that was my most painful crypto interaction yet. I'm not even sure why I'm posting this, since I don't even know if it's bullish or bearish for Ethereum. Yeah, no kidding. Adam, what say you?
Yeah, let's hear it.
Okay, so yesterday, my gosh, today's Friday. So yesterday, I got a message on, well, you'll hear how this story starts. I got a message on LinkedIn from a financial advisor friend of mine who's actually Canadian. He's in Canada, and he said, hey, I have a client who asked me about crypto and I know nothing about it. Do you have a few minutes to chat? So I called him, and yes, we used a phone, and we called. And while I was in Texas yesterday, so I was walking around Dallas, and he said, my client's got 6 figures worth of crypto, and he's asking my thoughts. And I was like, okay, well, what thoughts? He goes, well, most of it is in one called X, and I was like, RP, and he said, yep. I said, okay, go on. And he goes, there's another one called, I forget, I honestly hadn't heard of a couple others. Stellar was in there, right? Because it's, 2017 again.
Jeez.
Oh,
and, but look, what I have to go to is, what I have to tell this advisor to tell him is, look, this advisor, I told this guy, you're not going to be able to have a conversation with him about what to invest in from a crypto standpoint. For all you know, this guy started with $10,000 and now he's got 200,000. And who the hell are you to tell him it's wrong?
Yeah.
Right. He went from virtually nothing to something.
Yep.
And there are people in the TradFi world that look at us. And if you made your money in Bitcoin or ETH, they're going to go, well, that's crap too, because you didn't do it in the S&P 500. And someone who makes their money in NVIDIA didn't do it in Microsoft. Someone who did it in Microsoft didn't do it in GE. Like, there's always going to be that movement of, you didn't do it the way I did it, and I'm the old school guy. And look, I told you guys, I'm almost 50, so I'm pretty much a boomer when it comes to a lot of this stuff. But what I had to tell him from a financial advisor perspective is like, okay, this guy might have reasons why he's into these, and like this particular post was talking about, because it's going to be, they're going to launch the stable coin for Japan or something or other. Might have reasons, might have done the research, whatever. You are not going to have the capability at this point to have a conversation with him about it. So you have to have conversations with him about risk and return, and about diversification of assets. Is this person have $200,000 worth of crypto out of $10 million net worth, or out of $220,000 net worth? What was the basis? Have they gone up or down? What is the investment thesis? What are you going to do if XRP does go from wherever it is today to $10 a piece? Are you going to sell? Are you going to take some off the table? If it goes down to 50 cents a piece, are you going to sell? Like, those are the conversations I have to have with advisors, because the advisors aren't going to be able to have the technical discussion of which ones, have better value than others. Most of them are still at a speculative stage, especially for the billions that a lot of the protocols are worth, a lot of the tokens are worth. They should not be worth billions. And so, like, that's what I, had to kind of hold my nose and say, look, this guy might have reasoning for this. He might be working for a company who is building something on XRP, or trying to build something on XRP. And so I had to have a real conversation about, okay, your job as the advisor is to talk about risk, and to talk about compliance, and talk about basis, and talk about taxes, and all those things, and go, okay, again, it goes up, what are you going to do? At what point do you get out? At what point do you get out of half? At what point are you playing with house money? And have those real advisor conversations, because we in this little room, and I guess now everyone who's watching us on X and wherever else they're watching us, might go, well, I wouldn't have my, most of my money in those tokens or something. But again, there's someone who's made their money on NVIDIA that's like, oh, those silly crypto people and their silly ETH tokens. And, that's a bunch of crap. I don't believe in it. And there are Bitcoiners who look at ETH, and there's whatever, like, you can go down the laundry list of people who have attained some sort of wealth who look down on us, and we look down on someone else, and like, it's going to keep going there. So it all comes back to basic financial planning and risk management, and having an investment thesis. And this guy might have an investment thesis behind these. I don't know. He might have $5 million and 200,000 is nothing. So what the hell? Let it ride. Go, throw it on Trump coin next if you want to. I don't care at that point. If it's a significant amount of wealth, then you got to treat it like it's a significant amount of wealth. How are you going to feel if it goes from 200 down to 20? Are you going to be sick to your stomach? All right. Well, if so, then we need to start taking care of that right now.
Yeah, like time horizons.
Right? And not think, yeah, you got to do some just basic, thoughtful financial planning around that. So that's my kind of story, because I had one from yesterday with I can't believe you said XRP and XLM in there, because it was kind of, it's like this guy had just gone down the list and stopped at X.
Yeah.
Like the list of tokens stopped at X. And
if you go on YouTube, if you go on YouTube, it's what the algorithm is pushing right now, right? If you go on like your Facebook feed, those are the influencer videos that are pushing that are all in like a tight cluster of, because you watched A, it's recommended for B, and it's really highly ranked. So you see the first one, you click on it, and then they start feeding you more. But it's self-reinforcing, a pretty unhealthy valuation.
Yeah, it is. And look, we don't know what the valuations of all these should be. And I had a conversation with a group, not too long, a group of financial advisors, and we were talking about, look, what happens if this administration allows the fee switch, allows most of these protocols to actually start passing the fees on to the token holders, which they haven't done to this point because they would be securities. But what if they allow them to do that? What happens? And a guy who is, neck deep in valuations goes, the values will all go down. They're not, like, most of these protocol tokens are not worth the amount, the fundamental valuation.
If you value them based on dividends, yeah.
Exactly. You're right. So it would actually be bad from a value perspective right now. In the long term, it would probably be good because we would get to some fundamentals and we'd go, all right, well, now you have to change around the protocol to get more fees to the token holders. Or you say, we don't care. We're just going to build the protocol the way we want and screw it if the value goes down a little bit. Our token holders are not stockholders. We're not beholden to them. But like it was interesting, one, that you brought that up, and these are like some of the exact tokens these guys had, but those are a lot of the conversations I don't know, either have to have or get to have or whatever. Those are the better conversations. The worst conversations is, hey, I have a client who put money into some company and didn't tell me, and they claim to be mining Bitcoin or something, and they can't seem to get their money back.
Yeah.
And I'm just like, okay, well, guess what? They're not going to get their money back. I have too many of those conversations.
Yeah.
I'm glad those have gone way down. And I have more conversations with people that, hey, my client has $200,000 worth of XRP. What should I tell them? Like, I would much rather have that conversation than your money's lost forever. Yeah. Although probably 80% of people on this call would say those are the same thing.
Yeah, we did a deal.
No, I wouldn't say it's lost forever, but your point of we have experienced the 90% drawdowns, right? Like,
yeah,
I've been there when ETH went from 1,400 to 80, and yes, you are sick to your stomach. And but
I want to. Can I go back to something earlier, like one of the really early ones you read, JT, that I wanted to hit on? Someone was talking about XMTP, right? The
private
messaging protocol.
Yeah,
and there's another one. There's push protocol as well. I think those are so interesting because when you can have messaging like that, messaging directly to a wallet that can be encrypted, I think that's going to be tremendously interesting. I think of it from the perspective partially of like a financial advisor in RIA, right? If I can message if I know that I'm managing my clients' assets and they're in their wallets and I can message them to their wallet, one, that's highly compliant, right? Like it's very safe. I can message my client and it can be like, sign this transaction, and the transaction is right there. Obviously, assuming that no one else can hack into that and have a client, signing transactions. That's pretty cool. But I also think of it in terms of other ways of messaging. So an example is I've been trying to talk to these doctors in Texas about the care for my mom and for my grandfather. So I still have a grandfather who's alive. He's 101 years old.
Oh, wow.
And I'm trying to talk to the doctor. You talk about World War II, like he fought in World War II. He was a navigator in Europe in World War II.
Father-in-law of
He's got some awesome stories, by the way.
Yeah.
Oh, he was in Europe. He actually flew with Jimmy Stewart.
Yeah.
They used to play craps together. Like, he's got some awesome stories. Anyway.
That's cool.
Anyway, but I'm trying to talk to the doctors, and there's this whole HIPAA thing. Like, they can't message me. I have to get certain certain things signed. Well, I got to convince my 101-year-old grandfather to sign this thing to tell the doctor they can talk to me so I can help take care of him. But once you start having some of this, like once I start connecting, and someone earlier mentioned on-chain identity. So once you meld on-chain identity with health records, with on-chain messaging and stuff, I think that kind of thing is actually going to get a little easier at a time when more of us in my generation are having to take care of our parents and our grandparents. And that has nothing to do with the value of crypto assets, except that it's more transactions, it's more things operating on the network, which in theory should drive up the value of tokens like ETH, because if you're going to need ETH or you're going to need some L2 token to make that work, to basically fund that, that's where some of the value is as well. And if we go all the way back 25, 30 years and figure out where the hell the value of this weird internet thing is, early on we thought it was just I launch a company with a .com after the name and I can sell books or whatever else, and I launch I have an IPO and I launch stock. And lo and behold, what it comes down to is the network is more like I can launch more value using the network that is the internet, using the network that is Amazon, than just what I can do by buying the stock of those companies, right? So we're going to find other ways to use the network where what we realize is it's just decentralized data. It's not necessarily decentralized finance. It's just decentralized data. It just so happens that all of our finance is just data. All of our money is just data. Mm-hmm. We're just figuring out different ways to utilize it. So I thought the XMTP thing was really interesting in light of the fact that I was trying to get a hold of a doctor today and I can't seem to do it.
Yeah.
And I thought, man, this would be so much easier if they could just message me through an app and we could talk that way.
Yeah. With all that, proof, like you said, proof of humanity with like a zero knowledge messaging type thing at scale.
But let's be fair. Proof of humanity is a little skeptical, right? Like not all these people are really have a lot of humanity.
I get it. Yeah, I'm just figuring out how do you on-chain a 101-year-old man and be able to have him communicate medically with his family to make decisions at a difficult time of life. Hats off to him being in the European theater of World War II. Just incredible stories. My father-in-law, it's crazy I can say that. My father-in-law was the entire Pacific Theater War, Guadalcanal, Guam, Midway, and eventually went to Iwo Jima. He got shot a couple of times. He had a Purple Heart. And then he got sent home. He was gone without leave for 4 years of that incredible war. Insane. Okay. We got a couple left here. User Here I Am Alive on Reddit. User Here I Am Alive is a duder number 30. It says covers Goldman Sachs's ETH holdings, and user Banana Boat Spirit analyzes the details. Banana Boat Spirit is a duder number 6. According to X.com exit liquidity, Goldman Sachs just disclosed owning $475 million in Ethereum through BlackRock and Fidelity ETFs, an 1,800% increase from $25 million in November of 2024. Good night. Banana Boat Spirit replies, great data, thanks for posting. For context, and as another commenter noted, this post links to Goldman Sachs' 13F SEC filing. It shows all the assets under management for their client holdings and not Goldman Sachs' own balance sheet. I pulled some of the numbers into Excel to examine, and some interesting data points stuck out. Goldman Sachs' clients are holding $1.57 billion in total Bitcoin ETFs, $157 million in Bitcoin ETF call options, and $611 million in Bitcoin ETF put options. Net exposure to BTC is therefore $1.11 billion, spots plus calls minus puts. Their clients are also holding $476 million in ETH ETFs. There were no call option or put options positions listed. As of the end of the filing period, Q4 of 2024, BTC's market cap was 1.85 trillion. ETH's market cap was 400 billion. This indicates a comparative ETH to BTC market weighted balance of 22%. The comparative ETH BTC net exposure of Goldman Sachs' clients, however, was 42.7%. That's 0.48 billion in ETH ETFs divided by 1.1 billion BTC ETF net exposure. If you consider Goldman Sachs' clients as air quotes smart money, then they were overweight ETH by almost 2x, relative to market as of the end of last year. The TLDR, please keep crying and selling me your ETH coins. I'm going to take this opportunity to let people on X know that's what makes Reddit special, is you get a tweet that comes in with the headline, and then you get a user like Banana Boat Spirit come rowing along in his banana boat and putting some real salient, actionable words in long form for people to actually learn from. We have the best teachers in Ethereum crypto on Reddit. Hands down, it's not even close. Come check it out sometime. What's your takeaway on that little stat sheet? What it tells me is somebody knows something. It's pretty incredible. Pretty incredible the way they are overweight like that. Gee, I wonder why. And finally, for this week, BTCS Kyla, that's a relative newcomer, delivers the daily ecosystem update. This is the BTCS intern, Kyla. She started coming through and posting on Reddit stuff from their company, BTCS. So this is short position surged 500% as hedge funds bet on continued decline, raising risk of a short squeeze. And they have a link to the articles. They do their own little roundup. It's so cool that they share that on our daily thread.
The short positions are wild. It's quite the candle.
It is quite the candle. It's all-time high, isn't it?
It's really abnormally high. Now I can contribute some of that to some delta neutral positions like what Athena is doing, but also it just is high. It's really high.
Very good. And then it goes on from there. Ethereum co-founder Vitalik Buterin reveals the bitter truth about AI and ChatGPT. Let's open this up. According to You Today, Vitalik, co-founder, frontman, second biggest, blah, blah, blah. Buterin issued a post that reveals his rather negative attitude toward the flagship OpenAI product ChatGPT when it comes to writing texts and providing advice in general. This tweet comes after a blog post published by Buterin in January in which he shares his fears about a super intelligent AI launching in the future. So the rest of that story is available on You Today if you want to come find it. dailydoots.com, or you can go find BTCS Kyla on the Reddits. And I think we got January 5th through the 16th, Zugrama, India. Zugrama, a 6-week residency experiment in co-living with founders, builders, seekers, doers, and experts. So if you want to go cohabitate in India for 6 weeks, be my guest. January 21st through February 21st, Ethiopia. This month-long event, in Ethiopia, brings together Web3 builders and innovators to brainstorm, build, and grow Ethereum projects. It's a space for collaboration, hacking, and shaping the future of blockchain in Africa. That's freaking exciting. I always loved, when I was working with Greenpill, there were several projects that were doing all kinds of stuff like green, terraforming parts of Africa along the Southern Sahara, and stuff that was dealing with crypto and raising funds and public good funding and all that stuff. And it's ripe for it. I mean, the folks in Africa have been long held under these, regimes that they build their monetary class money. The king issues the money, and then it always goes to shit. So good on them. Wow, month long there. Fantastic. And of course, 17 days left for the ETH Denver brand hack, a 3-week challenge for designers and marketers to craft Ethereum's Intel Inside moment. And there you go. The ETH Denver brand hack. Fantastic. All right. I think we're about done for this week. Looks like we got some people hiring. Kraken's looking for a back-end crypto engineer, and a full-stack engineer is needed by Kiln. We got all kinds of total value lock metrics for all the various L2s. And she says, drop some suggestions on what I should add next. By the way, I try to get relevant news from trusted sources, but if there's not much interesting going on, like price updates and predictions, I tend to get the most interesting ones regardless of sources. And that wraps up our Doots of this week. So glad you could stop by. Adam Blumberg from Interaxis, Thank you for hanging out with the Mavericks. We will see you all in Denver.
Okay. Thanks for having me. Hope to see everybody in Denver. Let's go have some Kansas City, second tier barbecue.
Yeah. Hey, easy now. I was wanting to bring you some of my JT's Big Hugs rub. I got 2 rubs I need to bring you. I do a Big Hugs rub, which is a sweet heat for pork, which is what I'm making there. And then I have a chicken-based rub, poultry-based rub that I call the chicken choker. And it's really good for smoking chicken and making street tacos out of it. So I'll be sure to bring both flavors of rub for you. I'll make sure you get a bottle of that. I will be in Denver. We will have barbecue coming out the wazoo. Even second-rate Kansas City barbecue is still better than the barbecue you don't have in your hand. So we'll be sure.
I can't wait, man. I can't wait to do that. See you there. See everyone else there. If you're in Denver, hit me up. I'm always happy to chat about the stuff.
All right, brother, man. Good to talk to you. All right. Well, thank you so much for subbing and smashing the bells around here. This was the first one. We had a little bit of a jumpy start, but we made it live on X. Hello out there. It looks like about 106 people, or this is what it says, 106 views. That's pretty cool. If you guys haven't given a follow, give me a follow. And, we're going to try to do this every week. We're on episode 99. We largely do this show on Discord. Be sure to get on the EVMavericks Discord. We do this show live on the stage, and you can raise your hand and get on stage if you want to ask some questions of our guests. We got a number of guests coming up. I had to go over those guests real quick. Oh, and we're also playing on LinkedIn too, but I need to figure out the branding of that because I don't think streaming from my profile is going to be very, very noteworthy. Let me go back to the notes here. It looks like March 7th. Guys, Ram Aliwalia is coming from Lumina Wealth. If you don't have him followed on Twitter, you need to come check him out. Let's open up this thing here. I may tag him. Maybe his ears are burning. But Ram Aliwalia he's just a really fun guy to listen to. Very knowledgeable. He goes live on X quite a bit. You can follow him at Ram Aliwalia right there. And then we have Andy Lauer from Scenario Protocol, Brett from Mega ETH. Or Mega Eth. I need to make sure I say that right. But yeah, so this is going to be kind of a fun episode. We'll see what that's all about because this one has been a fun, controversial thing. I've seen them kind of pop off in the daily, but I love listening to Brett on Twitter. He's enjoyable to listen to. Grant Hummer from Etherealize, and then we just announced Summer.5 for April 4th. So we hope that you'll sub to our podcast wherever you get your podcasts. We're out there. Ethfinance, EVMavericks, just search that anywhere or look at the description on X here. We'll get you tied in. Thanks so much for joining on behalf of Ethfinance. Oh, by the way, we stick around on Discord if you want to hang out with us on a Discord for another hour. If you guys got nothing else to do, we continue the party in the hotel lobby right over there. And it's a fun place to let loose when the parents aren't watching on YouTube, X, or LinkedIn. On behalf of Ethfinance and EVMavericks DAO, my name is JT. Cheers and big hugs from